What if I told you there is one company that stands between every AI chip in your smartphone and builds the robots taking over factories worldwide? A company making bank from both the AI boom and the automation revolution that most investors have never heard of? This is Teradyne, ticker TER, and they are absolutely crushing it right now. Here is the money shot. Teradyne does two things that are printing cash. First, they test every single AI chip before it goes into your phone, your car, your data centers. We are talking NVIDIA H100s, Apple processors, every major chip. If it does not pass Teradyne testing, it does not ship. Period. But here is where it gets spicy. They also own Universal Robots, the company building collaborative robots that work alongside humans. While everyone is freaking out about AI replacing jobs, these robots are actually helping workers be more productive. Let me blow your mind with the numbers. The collaborative robotics market is exploding from $3 billion today to $18 billion by 2030. That is 30% annual growth, and Universal Robots leads with 31% market share. But wait, it gets better. These collaborative robots cost around $35,000 compared to traditional industrial robots at $100,000 plus. Small manufacturers who could never afford automation can now deploy these things in weeks, not months. We are talking about a massive democratization of factory automation. Now, the AI chip testing side is even juicier. As AI chips get more complex, they become exponentially harder to test. That means higher prices and longer contracts for Teradyne. They just reported record revenue in their memory testing division thanks to AI demand. Here is the kicker. The semiconductor testing market itself is growing from $8 billion today to over $12 billion by 2033. But the AI chip segment, that is growing at 30% annually. Since AI chips need the most advanced testing, Teradyne is capturing way more than their fair share. Think about it. Every ChatGPT query, every Tesla autopilot decision, every smartphone, AI feature, they all depend on chips that Teradyne tested, and every factory getting automated needs their robots. This is like owning both the brain and the muscles of the future economy. Let us talk money. Teradyne just reported $2.8 billion in revenue for 2024, up from $1.6 billion a decade ago. That is solid 6% compound growth through multiple semiconductor cycles and COVID. But here is what I love. When demand is strong, their margins explode because they have high fixed costs. We are talking 25 to 30% operating margins in peak years. Here is what Wall Street is missing. Teradyne is trading at only 20 to 25 times earnings, while pure AI plays trade at 50 to 100 times. You are getting exposure to the AI revolution at a fraction of the valuation. Plus, they have over $1 billion in cash and minimal debt. That gives them flexibility to invest in R&D, make acquisitions, and weather any storms. The risks? Sure, they are cyclical. When semiconductor demand drops, so does Teradyne. We saw this in 2023 when chip oversupply hurt their equipment sales. But smart money uses those dips to accumulate shares, knowing the long-term trajectory is up and to the right. The robotics business faces competition too. Companies like ABB and FANUC are fighting for market share. But Universal Robots pioneered this collaborative space and still leads despite increased competition. Bottom line, Teradyne is the invisible infrastructure behind two of the biggest trends in technology. They have strong moats, multiple growth drivers, and reasonable valuation. As AI gets smarter and factories get more automated, Teradyne wins on both fronts. Is this the hidden gem you have been looking for? Drop a comment and let me know if TR is going on your watch list. Are you more excited about the AI testing angle or the robotics growth story? And if this opened your eyes to a company you never knew existed, smash that like button and subscribe for more hidden investment opportunities that Wall Street is sleeping on. Remember, this is not financial advice. Always do your own research and consider your risk tolerance. Thanks for watching.